So, here we go. I know it doesn't sound super exciting, but it's actually a pretty interesting topic. We got the history of American banking. Yeah, history, y'all stop paying attention, but it's actually really interesting. So this is chapter 10, section 2. And so you're probably all wondering why I got this big freaking words up there. That's because it's important. I have a slide devoted to one definition. What is a bank? It's an institution for receiving, keeping, and lending money. I will bet all my stock money that that's on the test and that it's on the quiz. It's definitely going to be on the quiz because I make the quiz. Okay. Yeah. Know that one is really important. Okay, we are on American banking before the Civil War. So a lot of this starts with the Constitution of the United States. Constitution says a lot of things about stuff, but it also doesn't say a lot of things. It doesn't say you can't do this, you can do that. And so there are two very, very different opinions back in this time. The National Bank is bank chartered by the federal government. They're all around the world. They're in every country has national banks or could have national banks, but we actually don't anymore. Okay, so two different views. The Federalists, they're more willing to bend the Constitution. They're the people that are like, if the Constitution doesn't say you can't do it, then you can do it. There's no law against not doing it, you can do it. And they wanted a national bank because it would issue currency, answer federal government's funds, and monitor other banks. But the anti-federalists, these guys like the exact wording of the Constitution. So you could only do things in government if the Constitution said you could do them. You cannot do anything the Constitution didn't specifically say you can do this. And they opposed national bank because they feared that the wealthy would gain control of the bank and used it to increase their power. Okay, these two parties absolutely hated each other, you guys. As you can see, they're exactly the opposite with this and on basically everything. Okay. The two main guys for both parties at this point in time. For the Federalists, we have Alexander Hamilton. He fought in the Revolutionary War. He was George Washington's guy. He was like his right-hand man for about the second half of the war. And then he believed in a larger national government. Most Americans didn't believe in that at the time, but a lot of Americans still aligned with his party. And then he was made Secretary of the Treasury in 1789, appointed by George Washington, because George Washington wanted his main advisors during the war to be able to advise him while he was president. He was a big-time Federalist. Jefferson was a big old anti-Federalist, Thomas Jefferson. He wanted government as small as it could possibly be. Just like me. He hated the government, you guys. Even though he was part of it. Okay. He was in France during the Revolutionary War, so a lot of people kind of didn't respect him all that much at first because he was gone while they were all fighting. And he was made Secretary of State, and he was appointed by George Washington again because he was in France. Washington wanted someone who's used to being out of the country and working with other governments to be a Secretary of State. And he was elected to be the third president of the United States. You guys, these two absolutely hated each other. They never agreed with each other, ever. Exact opposite points of view on everything. That's going to be kind of big later. Okay, so the first Bank of the United States. In 1791, Hamilton outfought Jefferson, and Congress approved the National Bank. And how Hamilton did that was he met with some important anti-federalists, including Jefferson and James Madison, and he basically said, if you guys give me the national bank, I will vote and get people to vote to move the capital of the U.S. from New York City to a plot on the Potomac River, which is now Washington, D.C. So they agreed to do that. Hamilton got his bank, and the Southerners got the capital more towards the south, because the Anti-Federalists were more often in the south. Okay. The bank was given a 20-year charter to operate, so it got 20 years to do its work, and then it was going to be gone, but it could be renewed and all that stuff. The bank did succeed in bringing stability to American banking. And later in life, after they were president, the people who fought Hamilton with the bank, Jefferson and Madison, did admit that it was probably the best thing that could have happened to get the United States out of debt. And the Anti-Federalists argued that the bank was unconstitutional because the Constitution didn't say the federal government has the power to make a bank. And the Anti-Federalists believe that you can only do things the Constitution specifically says. Okay, when Jefferson was elected president in 1800, Aaron Burr became his vice president. And this is where Hamilton and Jefferson absolutely hating each other is really big. Because of some things that happened, there were no Federalists running for president. It was two Anti-Federalists, Jefferson and Burr. And a lot of people were leaning towards voting for Aaron Burr. But then they were all the Federalists asked for Hamilton's opinion. And Hamilton goes, I was friends with Burr for a long time, but I do not respect him at all because he never has his own beliefs or opinions. He always goes with what's going to get him more power. He says, I'm voting for Jefferson for that reason. Him and Jefferson never agreed ever. They hated each other so much. But Hamilton endorsing Jefferson for president because his belief was big, and Jefferson ended up dominating that election, one of the biggest dominations ever in a presidential election. And then because of all that stuff, Burr was super ticked at Hamilton, wanted an apology. Hamilton goes, I'm not going to apologize. So they have a duel in New Jersey. And Burr kills Hamilton in the duel in 1804. And so after he died, Hamilton died, the first national bank, first bank of the United States, lost its biggest supporter. And when the 20-year charter ended, there was no one fighting for it to still be there, so it went away. Because this money was no longer backed by gold. States made their own banks all the time, and none of the banks states made were all that credible. Prices rose rapidly and kind of screwed over the people. And the people knew something needed to be done. In 1816, the second National Bank of the United States was chartered, again with a 20-year charter. By the way, Jefferson's belief in the Constitution, he actually wanted the second national bank because it actually helped. The first one helped big time. And when they were having problems again, he was like, we need this second one bad because we need this to be fixed. Plus, he also bought the Louisiana Territory, which wasn't part of his beliefs, but that's another story, okay? So, free banking era. The end of the Second National Bank was in 1832. After only 16 years of the 20 years. Andrew Jackson hated the bank. Hated it. And when he became president, basically said, I don't want this anymore. I'm going to veto your bill after it's been passed and been working for like 16 years. And for some reason, that still worked. Even though it shouldn't, it still worked. And so it went away. And state banks were allowed to flourish, and states made banks all the time. This had 4 super big problems. Bank runs. Know this, it's in bold. Their widespread panic, which people try to redeem their paper money at the same time. So everyone tries to turn in their paper money for gold all at once. That's not good. Some banks have no gold. And the paper money isn't backed by gold anymore, so it's completely useless. That's bad. Then wildcat banks. There are banks on the frontier. They like to do some really sketchy stuff. I'm not gonna go into it, but they just did. They like to do sketchy things. And fraud. Fraud was just everywhere. These banks would accept gold from people and give out fake money and then just completely disappear. And people made a lot of money off of doing that. And it was really bad. And then many different currencies. So all of the different banks put out different currencies because the US hadn't mandated the dollar as being the only currency. Yet, at least. So there were like 1 billion different currencies going around. No one knew what was worth what, and so that was problems. Jefferson, Andrew Jackson, nice job. Just kidding. Both in the Civil War. Civil War is big with economics. Both the North and the South made their own currencies. So this is years later after the dollar ad became mandatory across the whole country. North kept on using the dollar. The South used greenbacks. That's not what they're actually called. They're actually called demand notes. But no one really cares. All the people call them greenbacks. And that was paper currency used during the Civil War. There was obviously a big split between North and South banking. Because there was a big split between them in general, not just the banking, like everything. So the banks didn't do any of the same stuff, and it was bad. In 1863 and 1864, in the middle of the war, if you don't know what year Civil War is, National Banking Acts were passed to let the federal government charter banks again. So now they can make more banks like the First and Second National Bank. And this brought stability to American banking during and after the Civil War, which actually leads up to one of our times of biggest prosperity going into the 1910s and 1920s. The gold standard. I still wish we used this. By the way, the gold standard was my favorite thing ever. Gold standard is a monetary system in which paper money and coins had value certain amounts of gold. We no longer use it because we're dumb. The federal government would keep a crap ton of gold. And when they'd give out money, the money would be worth a certain percentage of that gold. And money was always worth more because gold was worth a lot of money. And it's going up even more now. So I really want the gold standard back, but it'll never come back because our government's trillions of dollars in debt and we don't want to buy any gold anymore. Banking in the early 1900s. The central bank is a bank that can lend to other banks in times of need. So not even the regular people have banks. Banks have their own banks, okay? There are banks that just lend money to other banks. They're called central banks. And there's this big old thing by the government called the Federal Reserve System. They determine the value of money, they print money, they do all this stuff involving money. I think maybe Skyler talked about it last section, not sure. But a member bank is a bank that belongs to the Federal Reserve System. The Great Depression, pretty sure we've all heard a lot about the Great Depression. And Plummer can probably tell you more than what is asked in the book, because in the book, the Great Depression's like a paragraph. There's like nothing there. So if Plummer feels like it, he can tell you more about the Great Depression. It began in 1929 and lasted over a decade. That's legit all it says in the book. The rest of it I looked up and put on there because I feel like you need to know more about the Great Depression than that. So in the 1920s, the economy was doing stinking awesome. It was called the Roaring Twenties for a reason. And the banks loaned large sums of money to high-risk businesses. Some of them worked, but some of them didn't. When the businesses that didn't work failed, the banks collapsed in on themselves. They didn't have any money anymore because they gave it all away, and then the people whose businesses failed couldn't pay the money back, and so the bank collapsed because they had no money to loan to other people. People wanted to take their money out, they couldn't do it. So people around the country lost their money, a lot of money, when the banks collapsed. And they all rushed to withdraw, which really didn't help because it made the banks collapse faster. Because when banks have no money and people want them to give them their money back, they kind of can't do it because they don't have any money. So people are out of money, banks go out of business, bunch of bad stuff. Banking reforms after the Great Depression and during the Great Depression. 1933, President Franklin Delano Roosevelt. This guy served 4 terms as president. He kind of broke all the rules of being a president. He acted to restore confidence in the banks. And I don't get how this restores confidence, but he closed them all. That doesn't seem like it would restore confidence to me. Okay, I'm gonna restore confidence. You're all done. Makes no sense to me. Within days, sound financial banks began to appear across the United States, which is good. Later in 1933, Congress passed the Federal Deposit Insurance Corporation, or the FDIC. I'm just legit gonna type what does FDIC stand for on the quiz and post some things, and that's gonna be one of them. Federal Deposit Insurance Corporation. You know it, okay? It's important. It's actually really important and really good. The FDIC insures bank accounts for $250,000. So if you have money in a bank and the bank goes bankrupt, the FDIC has to pay you all the money you have in the bank up to $250,000. So if you have $1 million in the bank and it collapses, you're only getting $250,000. That's why all the super rich people keep all their money in a bunch of banks so that they can get all their money back if banks collapse. That's good because if banks collapse, you want your money, and that keeps us from doing something like the Great Depression. It's one of the good things I think the government did. That's rare to hear. Okay. 2 crises of banking after that. In the late 1970s and 80s, savings and loans banks sprung up. These banks, these guys were whack. Okay, so because savings and loans banks made really long-term loans at super low interest rates. After about 10 years, when these banks were making no money because their interest rates were so low and the loans were so long-term that it was taking forever for them to get paid anything, interest rates shot up. And no one likes when interest rates go up, because then they have to pay way more on their loans. Losses on bad loans forced many banks out of business. Banks were being really, really not smart and were making really, really bad loans to really, really dumb people with really, really bad credit who really, really stunk and didn't do anything good and made no money, and so the banks went out of business. In 1989, Congress broadened the scope of the FDIC. It allowed it to go into more banks and allowed it to insure different types of bank accounts. So basically it can do whatever it wants. In late 2006, problems in U.S. banking threatened the housing industry. Everyone remembers when houses were super, super expensive. And it was good if you were selling your house, awful if you wanted to buy a house. It was really bad a few years ago. Banks issued subprime loans, And those loans are loans where you loan money to people with awful credit. Just awful credit history, and you give them money for some reason that makes no sense. Know what that is? It's going to be on your quiz. They're really bad. Because people with bad credit lose the money and don't pay it back. In 2009, President Obama signed into law a $787 billion stimulus package, the largest ever. Basically what he did is he was giving money to the banks and different things to keep them on their feet, to keep them running so there wasn't a large collapse. Despite his efforts, and he did a lot, despite his efforts, recovery has been very slow. It has been known the past few years the stock market has been going way up until like 2 weeks ago. Thank you, Apple, for losing me $350 on the last stock day. Now the stock market was doing really, really good for the past 2 years, and now it's killing me. So, it was a slow recovery, but we did recover, and that's good.